the general, my way of evaluating whether it should be in equities or not, I look at the relative strength of Standard & Poor's 500 versus AGG, which is a aggregate bond ETF. So if SPY is outperforming the bonds like they were here and like they are right now here, the thin line, solid line is the raw numbers, and the thicker line, which turns from green to red and back and forth, is the 5-day moving average. So it removes some kinks out of there. So as you can see, we should be in equities at this point. Let's move on to, so once you are decided that you want to be in equities, you really want to then figure out which sector of the market you should be in. And for that, we will switch over to the ranking of the sectors. So here I have ranked them by UPI. At the top, we see Spider, S&P Oil and Gas, Equipment and Services. And then the industrials, energy, and materials. So the idea here is that once you establish which sectors or more than one sector you want to be in, you can invest in them, or you can go and look for individual stocks in that sector. If you go to the Sector Spider webpage, you can easily find what's in that ETF. So XES, I think that the top holding there is Schlumberger, which was mentioned earlier. But anyway, that's one way to do it. You look into the stocks and then either buy individual stocks, or you can buy this ETF, as many of them, maybe top 5, whatever you like. The next option would be to, instead of buying the individual stocks, which I usually don't, to look for if there is a leveraged ETF for that sector. Not all of them do. XCS, for example, does not have a leveraged ETF, but XLI does have one. XLE does have. So some of them do. So that's what we will look at next. And that is, I have 44 ETFs, which are, not all of them are 3 times leverage. Some of them are 2 times leverage. For example, in this group, somebody had mentioned oil, which is 2 times. If you can find 3 times, fine, but if 2 times is okay for me. So here, and then I have, in the previous analysis, you have only those 11 sectors, plus I've added a few more. I added QQQ there, and I have added retail, for example, XRT, which is doing pretty well right now. Let's go back here. So this is the 44 ETFs I follow. Majority of them are 3 times leveraged. Some of them are only 2 times leveraged. And this list also includes the inverse ETFs. So when I rank these, if at the top of the list, you see short or inverse ETFs, that means the market is going down and those inverse funds are going up. So they will show up here. And that was the case 2-3 weeks ago. And now they have all dropped to the bottom. For example, Oil D, which is a short for crude oil, and oil U is the oil 3 times leveraged. So at this point, you can see the top ranked ETF is SOXL, which is semiconductors. And as you know, somebody had mentioned the semiconductors are doing well. And the DUSL is the industrials, you know, the 3 times the XLI, which is the DUSL, and the oil 3 times Dow, and ERX is the 2 times XLE, which is energy. So as you can see, and then the next one is retail. Retail did pretty well today because of the earnings with Walmart and I think Home Depot came up with earnings. So that's why the retails are doing well. And I feel from now on, retails will probably do well because of the Christmas season. The retail sales go up. So this is my take on the leverage funds. So you can pick the top rated funds here. One of the things I also noticed that lately the triple QQQ is also has been going up, and now it's right in the middle of the pack. So pretty soon that may be a good place to be. We will see. Next, so this is, if anybody has any questions, I can answer the questions here. The columns are 1 day return, 1 week return, 1 month return, 3 months return. And this is a composite of these. I've gone through it before in this group before. Year to date, semiconductors are down 79% because they were really bad year to date. So now they are coming back up. It went up 8.6% just today, and I think it was almost 10% yesterday. Let's look at graphically how these fare. Let's go. So this is the semiconductors. As you can see, they're going up pretty nicely. And if you look at the relative performance, this orange line is the semiconductors. So they've been down up until November, early. That's when they took off. So I will look at this. You can change these symbols in this graph, but I look at these. Usually I would look at Dow, the TQQs, small caps, TNA, S&P 500, UPRO, and Dow. I added some others here. SOXL is semiconductors, RETL is retail, and ERX is energy. As you can see, energy's been doing pretty well. Even if you don't want to go into very narrow, like just the oil or the gas, this energy sector itself has been doing pretty well. And from this, you can change the start date, but my emphasis is always on a month or so. That's what I pay attention to. So as you can see, these semiconductors are taking off faster than anything. And the next one is probably this lighter green, which is retail. So I expect retail to do well. So that's where we are right now. TQQs are not, they're coming up, back up, but there are only so many ETFs you can invest in. when I do position sizing, I think right now I cannot really have more than 4 or 5 actually. I'm 90% invested right now. Since Monday. Friday, on Thursday, IBD declared that we are in a confirmed uptrend. I invested some on Friday, then on Monday, and then some today. So I'm up to 90%. So I can't really, if I have to buy TQQs, I'll have to sell something else. So my idea is usually to upgrade the portfolio if I'm not selling downright selling, which happens. So that's all I had for today. If anybody wants to, and I use clear method to evaluate. Once I look at this analysis here, and I want to, let's say I want to invest in SOXL, I will go and look at the chart. So which is right here. So we want the chart to be not erratic. It should be very a smooth trend, which it is right now here. And if you look at some of the, let's say oil, not so much, okay? And actually it gave a sell signal for me at this point. Another one, the top rated sector we looked at was XCS. Same thing happened to that also, but it has come back up. But it's kind of flat right now. Dow is going up nicely for the last 7-8 days. So that's how I look at leveraged ETFs. Any questions?
Yes, Taljit. Somebody's asking about the app you're using and how if you enter the data manually or you have
Oh, you mean the app? I'm sorry, I missed it.
Yeah, I know it's Amy Broker, right? The app.
Oh yeah, this is Amy Broker chart. Yes, I use the data from TC 2000, and I recently upgraded my subscription to real time, just to time the buys and sells. So if you look at XOXL, this was an old comment.
Mm-hmm. And the fees for this software is the data?
It's about, so I use TC 2000 mainly for data. It's $300 per year. And then to go to real time, I think it's $15 per month. And there are things we can do here. You can do scans in real time. For example, one of the things I do scan for is an increase in the price by 1 ATR on 150 times the volume or average volume. So, and that shows up as this indicator here. So that day we had a big rise. Let me get rid of this because okay, I'll do it later, but this is an old comment. And one of the things I look is if during the day something is tanking, I can sell right away. I won't wait till the end of the day. This dotted line is a 21-day exponential moving average. And that's probably a good indicator when the price break crosses that, like it did here, and then it kind of went sideways, and then it did it again here. So that was a good indication that something is going to happen. And it never breached downwards. These are the industrials. So my philosophy is that once you decide on a stock, you have to look at the chart and not rely on one-day data.
Okay, any other questions?
Also, you can spot from this screen. These are all the stocks which had high volume today and a big increase. That's what this column shows. Datadog, for example, has that criteria fulfilled. So it's, and you can do this in real time. And that's why I went to, and all the stocks which hit 52-week high, those are the stocks. They're also indicated here. 52-week high, it hit today. And that's the relative strength at a new high, these green bars. So it's kind of useful. So you can, and this screen will change during the day. I try not to trade anything before 3:30 in the afternoon, but I will do sell something if it's going out of whack. So that's why I went to real time. Okay.
Nice. One question, Taljit, the consumer discretionary sector. We have these
Yes.
inflation numbers starting to show some deceleration. What do you see in that? Are you seeing a turn in that XLY?
I can go back to consumer discretionary. That's
I think it's biased by Tesla in the index.
what is the symbol for consumer?
XLY.
XLY.
Yeah, it's in the bottom. Like
oh, right here, right here. Yeah, it's ranked pretty low right now. Now remember a few months back, utilities were high. They're also, and communication services is not doing well. For some reason, natural gas is not doing well. I mean, I think you have to stick with some kind of software so you can analyze sectors on a daily basis. That's what I do. And then go from there. Yeah, discretionaries, you know, Tesla was down today, right? I don't own any Tesla or actually, as a matter of fact, any stock directly. It's all through the ETFs.
Yeah, the other sector that is doing well, it's more a group, a team, the solar sector. TAN, TAN.
Yeah, I think FSLR was in the list today. Yeah, it hit a new high. Yeah, I ran across this, 21-day moving average just to have a rough idea where this is going. If it stays above the 21-day exponential moving average, you're doing all right. So today hit a new high, but the volume was kind of low, below average. What did Tesla do? There are some other headwinds with Tesla. Tesla in general is in a downtrend. You can see it reached the 21-day exponential moving average here, and it has never come up. That was back in end of September, and it's still below it. This red and this line is something else. It's really the relative strength of the stock. That'll be Tesla here, and that's the raw numbers. And this is the 5-day moving average. So that is still going down. So Tesla is underperforming Standard & Poor 500. Yeah, it went up 1.82%. It looks like every time it tries to go up, the 21-day exponential moving average, it touches it and comes down. It's done it a few times. So until it goes above that, you probably should not be long in Tesla. Anything else?
So the AMI broker fees is different from TC2000, right?
AMI broker is just a software program to analyze stocks, and you can feed in data from pretty much any source. I use TC2000 data, which is fed into. It's transparent, pretty much.
And AMI broker is
into any broker.
Single fee, right? You pay once and that's it.
Yes, yeah. AMI broker is just you pay for the program once, and I think I have had it for since 2010, maybe. It includes at least 4 revisions. So if there is a revision to the program, those are included. And then there's a nominal fee. I think last time I paid $100 to get the latest version. But you don't have, if you're happy with the version you have, you can just keep using it. All you need is a data source. I think Russ now uses it also.
Okay, and Ron is asking me if the TC2000. Go ahead, Ron.
Yeah, is that TC2000 gold with real time?
I think so. Let me see if it says at the top. I think you're right. It is gold. I do not have the super duper version, which I think lets you interact with other people. I do not have that version.
Okay, well, thank you, Taljit.
Sure.
I don't have questions, so I don't know if anybody else have any questions or.